40 to 60%, depending on where you stand. I've heard more people shocked by the percentage even more than the number. Okay, the percentage of how it went up is one thing. The number of how the actual taxes will be affected is another. But the value of your property is what affects all of that. So we're going to make this, I think, fairly streamlined, easy. And any questions you have, feel free to interrupt. All right. So we're here to answer questions. That is me. Just want to point that out. Okay. And my bride right over there, Krista. We've been doing this for 22 years now, and we have learned to stay in our lane. So when it comes to that, we want to make sure that we're answering the right questions for you from the real estate side, but that's also why I have Michelle here on the lending side. So the four things we're going to talk about are what are property taxes, why they go up so much, so quickly, what does this mean to you as the individual, and what can you do about it? So let's start with the first one. What are property taxes and value assessments? So how many people got a letter in the mail with a number that showed their home worth enough to where if you sell, you can retire? Right. Exactly. Okay. The actual definition of valuation and assessment is created by this entire piece here. But ultimately, what it boils down to, the value is what the local entity, whether it be a metro district, a county government, a city government, determines your home's value, and the assessment is the amount of taxes based on the value that they place on it. So when we look at it, it happens every couple of years. Quick background, I'm sure most of you already know this. Happens every 2 years. Really, they look at the last year and a half for this time frame. Now, this time frame is a 2-year period from July 1, 2020 through June 30th of 2022. Okay? Never mind that we're almost in June of 2023. That's the time frame they look at. And they do put a little more weight on the back end of that time frame when they're doing valuations on that. Now, if they can't find appropriate properties to kind of value that on, just be aware, they can go back as far as 5 years. And that's just a amount of time frame they allow themselves to try to find what they consider an appropriate value. They're not trying to make your home, exorbitantly overpriced or anything like that. They're trying to determine the value, but their model is different than kind of how we work. So, why'd they go up so much? See, I read that right off of there. Main reason, we had the biggest increase in recent Colorado history. I don't think there's been a 2-year period where we've seen property values and sales happen at such a pace. Do you remember anything even close to the 2-year period for valuation?
No, we were at 20, some days we're seeing 20 and 30% appreciation.
How many people heard horror stories of, well, the home's priced at $700,000, but they paid $100,000 more for it, and they were in a bidding war with 20 other people, and so on and so forth. We all have that friend, that person who, they had to waive appraisal, they waived inspection, they had to put more money down, they borrowed from parents, they had to, clean up their 401k to pay cash, whatever the case may be. We heard all of those horror stories during that time. A home would go on the market, there would be 40 people lined up and 20 offers within 2 hours. Okay? That caused this huge, huge increase. Now, I don't know if you can see this or not, but the previous 2-year period, it went from average price of $510 to $545. What does that work out to? About 7.5% increase. Okay? But from that time period to the end of that time frame, we're looking at the average price going from $545 to between $727 and $767. Okay, that is all just for Douglas County median price, sales price. okay? That does not take into account neighborhoods that were just inundated with tons of sales. That includes like rural areas where, you know, maybe it was an 800 square foot home on the edge of Franktown that didn't have any complete renovation and cost, you know, $100,000. Okay, I'm saying that there's a lot of factors go into this. So this is just median sales price. So we look at that, you know, how does it affect you? Here's a perfect example. This was given to me by the Douglas County Assessor as an example. He did an entire presentation for our Metro Board, but this I found to be the most telling. 2022, with the old tax system, estimated taxes were at $59.79, almost $6,000. The reevaluation took it to $9,000. Okay, easy math. That's 49% right there because of how they did that.
Okay, quick question.
Yeah.
The actual value, that is, if you put your house on the market, that's the market value?
So when we talk about value, they're saying that the county assessor is putting the actual value. That's what they're reflecting
So
as.
what is the assessed value? Why is it like $590,000 different?
So when you look at actual value versus assessed value is what is basically how they take the land value and separate it. When they're calculating their mill levies and all of those pieces, what they're doing is that is actually based on your total mill levy. Okay, take that number and you take it times the 66,150 because a mill levy is a percentage. Okay, a mill levy is 1/100th of a percent. Isn't that correct? And so you take that, you multiply it out. Different areas have different mill levies. Now, like I live in Highlands Ranch, it's 11.205. Okay, if you lived in, let's say, Sterling Ranch, on the other hand, it is approximately, I want to say it's like 39.4 right now.
And there's, because of the metro.
Because of the other stuff they have added in. It's all a matter of the tax. So the total mill levy is including the county, the state, and the district that this home happens to be located in. So by the time you add all of that in, that's how you calculate your complete tax amount. Does that make sense? Go. So when we look at the estimated taxes, with this new way it was calculated out, it went up 50% basically. Okay? Did that home change value by, you know what, $350,000 over the course of a year? No, not at all. But when they take their window and they see the increase in the neighborhood, they apply that type of increase to the properties, and that's how they come up with their information. How many of you live in Douglas County? Let me ask you that. Okay, a couple of you live in Douglas County. If you go to, there you go. If you go to the assessor website, they're kind enough to have a button on there that says, look at comparable properties. When you click on that, it shows their values for your neighbor's homes. Not what they sold for, but what value they put on it. That doesn't make any sense to me. If you sold your home for, let's say, $600,000, and I pull it up and it says $750,000, anybody else see an issue with that? Because I do, personally. So, the Arapahoe County is a slightly different website, but also gives you a lot of that same information. But they're doing it off of their estimated values, not off actual values. So, what can you do about it? It's easy. Gotta look at how does your property present to the county? Is the information accurate? Okay? Does it give you everything that you're looking for? Is it giving you the right square footage? Is your basement finished or unfinished? Is it saying that you have more bedrooms or bathrooms than what you actually have? Is it a proper representation of your property? And it'll go down, it'll show you like your previous year's taxes, how much it changed, percentage change, so on and so forth. So, how do we find the real value? We can take their word for it, and then we're all really happy about the 50% increase on our taxes, right? Or we can actually go in, we can take a look and see what actually sold in your area during that time frame that is comparable to your home. One of the things I've run across a lot are clients that bought homes during that time frame. And I don't know if you've got any phone calls on that recently,
Yeah.
but I get phone calls all the time. Dave, we bought our home in 2021, and we spent X, and now they're telling us it's worth $200,000 more. I said, do you want me to bring a sign over, or I can put a sign in the yard, or we can try to figure out what's going on. Ultimately, I tell them, let's submit to the county your purchase contract, your settlement statement, and let's show them that this is what you paid for the property. And if you got an appraisal on your property, let's submit that too, because then it shows the comparables, it shows the value of the property. It's all a matter of presenting a very lucid and clean argument for the proper value of the property. We all want our homes to be worth $1, $2, $3, $5 million. But if they're not, then why should we have to pay the taxes on these inflated values? And that's really what it comes down to. So,
I just want to say that's one of the most open and shut appeal cases we've seen, is where they did purchase it during that period of time for X dollars. If you show that, that's pretty much your appeal. You don't really have to go as far as to getting more comps and all the other things that other people will have to do if they didn't purchase during that time. Because we are seeing a lot of people that purchased at a lower amount and still the assessed is coming in much higher, even though they're using the comps during the period of time that they purchased.
right.
So that's one of the easiest ones to appeal, if you have that.
Absolutely. Yes.
So also, and I don't know if this is further along in your presentation, but if let's say it's saying you have 3 bedrooms and you actually have 2, or your number of bathrooms
If you
are
have a
off.
lower number on bedroom or bathroom count, those are taken into consideration when you're looking at value. Just like if you're buying a 4-bedroom home versus a 3-bedroom home, okay? Obviously, the 4-bedroom home is gonna have a higher value when you're buying it. So why wouldn't it have a higher value when they're assessing it or appraising it, okay? So yeah, that's where you want to look, let me do this, on your public record to see how many bedrooms and bathrooms. It's all this is like one page of 4 that are on for your public record. And accessing your public record is very, very easy.
And especially square footage, because like as my house is an example, they, for whatever reason, the assessor picked the one highest sale in our whole neighborhood, and it was higher by a lot, by like $300,000, and that's what they put as our value. And our house is one of the smaller in the area, and we're on an open space, but outside of that, this house was the highest in the whole neighborhood. Nothing even sold close to it, I think with even 200,000, one house. So that's our tax assessed value. It's like, that's not accurate. So use square footage, use all those other things to really narrow down what your value is.
And one other thing
Is that what
is,
they're using as sale, like comp sales in the area to come up? Because it seems
Seems
spread across like everywhere, like the average is 40%, like they got together and
Yeah.
they're like, hey guys, 40% increase.
so you'll find variations in that, but it feels that way because every market had such a significant increase. That's why it feels like they kind of said, let's just call it.
And
It
to
wasn't quite
actually, like historically, tax assessed value, someone said, what's the difference between that and appraised value? So historically, we're just used to tax assessed value being so much lower than even actual value. So there, you've got a combination of issues happening. You have an assessor's office who was really delayed in ever really assessing and maybe increasing those tax assessed values as they should have for a period of time. So they got lax on that, and it was probably way undervalued. And then you had these huge increases for multiple years. It's like they woke up and went, oh my gosh, look at all this money we could be getting. You know, went ahead and grabbed the highest sales in every area and then made those the values.
Right. So does that answer your
Yeah, so
question?
I'm just curious if that was the.
Yeah. No, they didn't all get together late at night and go, oh, okay.
Have you
It feels that way, but no, yeah.
have you seen any specific counties be higher, or is it pretty much straight across?
Douglas County, I will tell you, is so far from all of the appeal information that I've pulled for everybody, has been the most off on a regular basis that I've run into. Denver County actually has been fairly close for the most part. Arapahoe County, there are pockets. Some are fairly close, others are, extremely off. Jefferson County, it is almost home to home on how different they are. But generally, Jefferson County has been fairly high as well. But I've seen that's been very peak and valley on values for that. Elbert County actually looks pretty flat, relatively. I mean, not just physically, but value. So you can appeal. You can appeal. You gather information. You gather what's sold that matches up with your property. Is something that I've already helped a lot of people with, and kind of give them direction on what how to go about it. There we go. You can appeal up to 3 times, believe it or not. The first appeal is generally an online appeal. There's a form. Douglas County, Arapahoe County, Jeffco, Denver, Adams, they all have online appeal process. Okay? You need to input your information. You need to make your argument for them as well. Okay? It's not just saying these homes sold, lower my number. You have to tell them why your number should be lower. What goes into that to make it a different value than what they have. You need to provide information. Do you have me with 6 bedrooms? I only have 4. Or you've got my basement square footage as above grade square footage as well. I have 2,500 square feet, not 5,000 square feet above grade. And then you put all that in, you send it in, and they will get to it. It will take them time because they are all inundated, completely inundated.
One other thing you can do with that is if you do find, you have those comps, you can pull them up online, you can see pictures. If those homes are way over improved versus yours, those would be comments you'd want to say, like they have, a $50,000 upgraded kitchen, I have an old kitchen, or whatever those changes might be, so it's important.
You're in the middle of a neighborhood, they
Right.
back up to open space.
Right, those types of things are important.
Your basement flooded last week. That doesn't work. But yeah, you can use any and all of that. The second appeal, if that gets denied, then you have until, let's see, the first appeal has to be done by June 1st or 8th, depending on the
Depending on
county.
county, yeah, first
Okay.
or the 8th. So say first. to be
So
safe.
just say first to be safe. I know Douglas County, just for an example, is the 8th. Where's Jeff go?
Jeff goes.
I thought it was the 8th.
Yeah, June 8th. I think it's
Okay, it's
Somewhere
one of
in
the
that
two.
range.
Second appeal, let's say they deny that, that's okay. You can appeal again. Take all of your paperwork, all you have to do is make a very direct, very empirical argument for your property. And you have to do that one in person though, because they want to know, if they're telling you one thing on the rejection of the first appeal, they want to know why did they miss something. You need to explain to them. If you argue with them, you're going to lose. If you try to explain it to them, you've got a better chance of making that happen. Let's say that got denied. You can theoretically do a third appeal. However, the third appeal usually involves, you need to have, it's a legal process, you need to have your attorney present the reasoning behind that, okay? And they will have the city, the county, the district attorney, whoever, take the information. That way it's considered a little more of an impartial presentation. But that becomes more expensive, and then you have to weigh, is it worth it at that point? Now there's also something called an abatement. I'm trying to keep track of time, but do you want to explain an abatement?
I mean, if you miss the date and you, June 8th comes and goes, or whatever your date is, and you decide, shoot, I should have done this, I wish I would have done it, then you have to wait until January. And at that point, you could do your appeal, And if it's granted, you'll get it, you know, it's gonna be, prorated or whatever, but you would want to do that. And what Dave and I talked about is think about people that are, if you were gonna buy a home now, that, let's just say you were gonna buy a home after June, sometime in July, August, September, and the people that you're buying from had not appealed, but their taxes were higher than they should have been, then as a purchaser, I think there's some discrepancy. I think you still could go back and abate even as the new buyer, is that right?
Correct, but
Yeah.
still after the first.
But it would have to wait till after January, and then you could do that. So, you know, that's another thing to think about. Obviously, for you, for your home, if you appeal and get your taxes down, that's great for if you ever want to sell your home, right? It makes it more appealing. If you're looking at buying a home and someone didn't do it, you could go back in January and do that. So then you just have to weigh the options on if it's worth it and how much you think you'd save. But that's basically, you'd have to wait that period of time then until January if you didn't do it by June.
Yep. So, ultimately, what it comes down to is, do you feel that the number on there when they give you a value, is that number significantly off of what you feel your home is worth even at the peak of the market price? That's the real question you need to ask yourself. And if you're not sure, let's take a look. Let's hold that conversation. Let's go through that meeting. Grace calls. Let's go through, let's take a look at those comparables, okay? I have received a lot of phone calls. I think I've sent out, I've done 8 today.
Today. Yeah.
And I've talked to 3 of those people, and all 3 of them, we went through their problems. We talked about, I didn't finish my basement until this last winter. Okay, well, they're looking at it, they're looking at a finished basement. That's part of your argument, that's part of your appeal process. We just did a remodel. When did you do it? Well, we did it, right, late fall. Okay, then you have pictures from before. Make that appeal. Put it all in writing. If you don't appeal, it will not change. If you appeal and it gets turned down, and you feel that you made a valid argument, you've made the effort. You have nothing to lose. You have absolutely nothing to lose, only the opportunity to gain. This is for your benefit. It's not for anybody else's benefit. The county assessor for Douglas County, like I said, did a presentation, and pop on through it. And he made it very clear. Ours are high. If you have a case, by all means, get it submitted. Okay? And I'm guessing that the other county assessors are probably of similar mindset because they knew this was going to happen the minute they started putting those notices together. Go, Clark.
So, we're in a semi-rural area, right? Some houses are R1, residential one, some have ag reservations, some have, there's all kinds of different categories. How important is it to go from, so for us to find another residential graded.
Are you R1 or A1?
R1.
R1. So
So we have to find another R1 in that window of time, which almost everything around us is A1.
I would tell you, actually, I would forget about the property designation because of the area you live, and look for other residences that are sold. They don't need to be necessarily zoned R1, but if you've got others that are A1 that have a residence on them, and might have to expand that area out and so on and so forth, we can by all means take a look at that, and we can take a look and see what's available to make
That's
that happen.
permanent.
Yeah, because ultimately it comes down to like for like. And just because, I'm an R1, you're an A1, if we're in the same neighborhood and we're similar, we should still be able to compare with each other. So don't let zoning stop you from from exploring is the opportunity.
If it was a marketability factor, like there are areas where like maybe something like that, even if it was a different, difference. But if it's a difference that makes a marketability difference, you can go, and then there's some notes on this, but you can go a little bit outside of that time frame on either side if you have to. If you can show that nothing sold that is comparable to mine. So to your point, like if they're the same and it's just the zoning, and there's not a marketability difference, it shouldn't make a difference. But if it does affect the marketability, then you can make an argument for that, if that makes sense.
Yes,
Do you have a recommendation for what to use if we're using the purchase of the home as our appeal? Like we purchased during the
then,
time.
like I said, I would use my
Closing
contract.
disclosure contract?
I use my contract and my settlement statement. That shows not only did you make a purchase, but that you closed. Okay? And that, even though that is part of their records, it brings it back to the top. If, like I said before, if an appraisal was done,
I don't think on yours we'd want to use the appraisal though, because I think that it appraised higher than you purchased at the time.
by a lot.
I can't remember, but there was, yeah,
Julian, for sure.
yeah, I think you'd want to do that, you'd start with the contract and this sort of settlement.
Most of the time when appraisals were done, appraisers weren't putting effort into adding value, so above and beyond.
Yeah, theirs was unique, because of the way that they obtained this property, so I think it did appraise higher, and we could go back and look at
And
that.
did you buy arm's length or not? Arm's
Yeah.
length simply
No.
means did you buy it from family members?
Yes, so that
Okay.
did, but the names are different, so I don't know if that would come up.
Don't bring up all
And
the
really,
points.
I mean, there's two
Is
states.
it one to get to pay for an appraisal?
It's not going to, unless that number is hugely different, I don't know that there will be a benefit to that because they need to look at that time.
Yeah, it has to be from back then versus
Okay.
now.
And an appraiser can do that, but they're gonna find because they're not physically going to the properties at that point, they're pulling the exact same information that we're able to pull.
You had a question, Jen?
Well, so I have probably two unique situations. Maybe one is similar to theirs, and then I had my son bought a home from his grandfather. So I think we wouldn't use the appraisal, but I think he could go ahead and appeal.
It could still show the purchase, yeah, we could.
Just the purchase price.
And even with it being,
But-
not being arm's length, that's not necessarily a red flag, just be aware of it.
Yeah, he didn't give him a huge, that one he came close to value at the time, I mean, he gave him something,
Right, but I think then since then, obviously things change. But I
but you
think
could
my,
use the contract and the settlement statement for that one as
Okay.
well.
and then my situation is that I did an addition on my home. So I bought my house back in whatever, 8 or 9 years ago, but we put in a substantial addition on it
When,
in the last year.
Yeah, but it was
Year and a
after
half.
that
but it
time.
was after.
It was after the time.
Okay,
That's what we were talking about
Okay.
earlier, like with
Yeah,
the
so just-
kitchen
You're
and so on
still
and so forth.
using that window for value, so just because you've done something after, I mean, it works both ways, right?
Right.
Some people's values are lower now, well, they're still using that period of time. Same thing for you,
So-
if you've improved since, you're still gonna go back to that time where you didn't have that square footage.
okay, so that was gonna be my question, is what exactly am I looking at if I wanna do that? Because even with the addition, which obviously does increase the value of my home, it doesn't do it as much as what they think.
Yeah,
So-
so-
Well, right, but you could argue my square footage at that time was less, my improvements had not taken place, so on and so forth. I mean, see, it's building the argument.
Right.
It's not just saying, I don't agree. It is saying, this is why this is incorrect.
Right.
You layer it, you say, square footage is incorrect, the bedroom count, you're comparing, like I said, open space to an interior lot, just for an example. You're comparing, you're giving my home value when someone just built a brand new home on the next, 3-acre lot next to you that, cost them $5 million to build. Whatever the case may be, look at the pros and cons, and, we can take a look, obviously, but as long as you're honest with yourself and you feel that it is off, let's try to find you the information. I do.
Okay, so after your picture, hold, stay,
That's still me.
stay there. And
Wait.
Yeah, don't go to my yet.
Read it.
And it doesn't look, a lot of times these pictures are very old compared to.
This one was done
Yeah.
last year.
Yeah, it's good. So let me,
Yeah.
So with regard to the homeowners homestead exemption,
Uh-huh.
it freezes your property taxes on the first 200,000. It limits them for like seniors.
Right.
So that, am I saying that right?
Right.
Okay, so have you heard any rumblings that the state legislature, $200,000 doesn't buy you anything,
Right.
anything?
That's a
Like,
window in the door.
not even like, I don't think you can get a one-bedroom condo for $200,000.
I just wish I knew a CPA in the room.
So is there?
Oh,
have
wait.
you heard-
Hi, Mike.
Have you heard that maybe the state legislature might increase?
There is no talk on that. In fact, we had a meeting this morning, with our board meeting, and
with the EDC.
yeah, and it really came down to, there's actually a lot of push against giving further tax break opportunities to homeowners as opposed to rent control and so on and so forth, all the things that we've heard of that. So, obviously, the people in this room own, okay? But we found out an amazing fact. 33 new state representative freshmen in the House, and out of them, what was it, 20 of them were?
The majority of those 33 new were renters. So that's why there's such a big push for this rent control, because that affects them personally. And so politically, there's a lot of, just education that needs to be done. Not only are they new to the legislation, they're new to they don't own a home, they don't run a business, they just don't have those experiences. So there's just a lot of education that needs to happen. We're hoping before the next, before the next,
There's gonna be a cycle or two.
yeah,
that
they
are gonna
learned
be
a
rough.
lot, they said, and now they might come back with, stronger with a better argument, but they also, there could be a lot of education that takes place in that time. I was saying the real estate board needs to, it's a target rich environment, go get all those new legislatures and teach them about real estate, because they don't understand. Yeah.
So you're not a lawyer or a CPA, correct?
That is
For
correct.
the record, yeah.
Yeah.
For the record, can we have that on the
Maybe
record?
pointing that out.
Yeah, right. Okay, quick question before we change slides. You guys might know this. Who do you think, tell me who you think has the highest property taxes in the country, name a state, and who has the lowest? Just throw out some
I already
ideas.
know.
I know you can't answer.
I don't know if
You can
Chicago's
just shout it
pretty
out.
bad.
What is it?
I said Illinois is pretty bad for property taxes right now.
New York.
Massachusetts.
Who do you think's the low? Yes, that's
Yes,
one of the
Massachusetts.
highest. Who do you think Massachusetts? Who do you think's the lowest?
New Mexico.
Montana.
Hawaii. Would you believe? Did you know it? Is that what
Just
you
from
said?
Tuesday.
Yeah. Okay, so we'll show you. Okay.
You want me to
Enter. No, it's okay.
Just
Just
hit those.
Okay, so surprisingly, New Jersey is the highest. My poor cousins live there, and I don't think they get a lot for those taxes either. It feels like. And then Hawaii was super low, but look at where Colorado is. So even though you can see the colors here, Texas is super high. I do a lot of loans in Texas. I'm always amazed. People move from Colorado and they're so excited to go to Texas because they're going to get this big, beautiful home, and it's going to be $300,000 less. And when we do the math, their payment's higher. Because a lot of times their taxes are as much as the mortgage payment in a lot of these homes. It's crazy. They buy an $800,000 home, their taxes are they use about 2.2%. I don't know, it shows up to 1.69, but by the time they throw in retro districts and all these other things, we use about a 2% average. That's $16,000 a year. So they're excited to get to Texas, and then they realize their taxes are outrageous. But if you look at Colorado, we're in the lowest, range in the country. So even though, obviously we do pay the state income tax, but when it comes to qualifying for a home, affordability for a home, the mortgage payment's a big part of your qualifying, right? The taxes are. And so having those lower taxes really does make homes more affordable from a qualifying standpoint. And when people come here and they go, oh my God, the housing prices are expensive, if they moved from somewhere where it's maybe cheaper, when they look at the taxes, they might go, oh wow, at the end of the day, my payment's actually in a better
Who
place.
said Illinois?
I did. I have family in Illinois.
Yeah.
It's horrible.
I didn't know the rest was that high.
It's so
I
bad.
mean, New Hampshire is
Yeah.
super high. Yeah.
I wanna see where they get the average home price though, because.
Yeah, because you have a lot of rural, so it's
Well, I know.
definitely the average.
2018 data.
And I also think Florida, that's true, but still, I think it still trends, you know what I mean? Like Florida, I would have thought would have been a lot higher. We have a house there and it feels like it just went way up again. So again, what years were reviewed, just to kind of reiterate, and I highlighted it. So what was reviewed from that January 2021 through that June 30th or July 1st, it won't really show up in terms of like you guys paying for it or seeing it until next year, because taxes are paid in arrears in Colorado. So what's going to be fascinating is how many in here have an escrow account and pay their mortgage through an escrow account? So half of you, the majority, or I guess half. We have one on some of our properties. So what happens is, if you have an escrow account, even though this new assessed amount just came out in May and you've got your new bill, you're not going to see this affecting you until next year. The problem is the way that it's going to affect you. Because they're paid in arrears, there's going to be a period where you're going to have to make up the back and make up the forward. So I was going to give you a couple of tips on that. The assessment process takes place every 2 years, and it comes out May 1st, but again, you don't really see the effects of that until the following year. So this is just an example. Like when you close on a mortgage, and I know we've been underwriter in here, so you typically will pay, if you buy a home, you pay your first year insurance up front. This is just an estimate at $3,000, it's just hypothetical. And then you pay a couple months worth of taxes and insurance to start your escrow account. Now this is someone's statement, so let's just say every month, they're paying $567.23 a month, and year to date they've got $2,700 in their escrow account. Well, next year, when this new tax bill, because we've received the bill, but the investor, their servicer, where they're making their payment, hasn't been billed yet, technically. So when they get the bill and they go to dip into the savings account to make the payment, they're not going to have enough money in there. Okay, so I don't know how many of you have ever experienced where your escrow account has had a shortage, and then all of a sudden your payment goes up. Well, this will be an extreme case, because what's going to happen is if you're, to Dave's point, some of those examples, and I know us personally, our taxes went up a third. So, they went from like 6 to 9 a year. Well, that's $3,000 a year or $250 a month that I now have to make up, right? My new taxes are $250 more a month than what I was paying. So in your mind, you think, well, my payment should only go up $250 a month, right? That's all my payment should go up. No, it's going to go up $500 a month until that back amount is paid. Because what's going to happen is your mortgage company now needs to make up the difference from last year, which they're now paying, with the new bill, and they have to start collecting at the higher rate for the new year. So you get double whammy. So if you got a tax bill that was higher, even if you're appealing it until you win, until that money is yours, start putting money aside so that when you get that new escrow analysis and they want to make these changes, if you can at least pay the shortage, then your payment will only go up the difference of the new amount versus your current, versus having to pay double whammy. Does that make sense? Because I get calls all the time from people going, I don't understand why my payment went up so much. My taxes only went up this amount, and it's like, well, they have to get the back and the forward, so it's a double whammy. Any questions on that?
Well, this might be a simple question I just don't know the answer to. I actually pay my taxes on my own. I don't keep an escrow and my insurance, but if you wanted to change that's probably difficult
To stop
do.
escrowing? Yeah, so there's some rules around it. When you get a mortgage, if you have 20% down or more, You can opt out of escrows, and depending on the lender, sometimes there's a charge for that, sometimes there's not. If you're already with a servicer and you've been escrowing, as long as you have 20% equity or more in your home and you've been making your payments as agreed, you can petition to have it removed. You typically can, it doesn't mean they have to, but they typically will if you request to do that. And you've been making your payments on time. So yes. So, and I just did an estimate for a guy today, and he's like, we were talking about taxes going up, and he goes, yeah, I think I'm not gonna escrow, I don't wanna deal with this whole like correction again. And so it's really a choice, you know. But again, property taxes are paid in arrears, so anything that's being assessed for 23 and will be due in 24. So those tax bills, they're reflecting the previous year always, which is sometimes confusing to people. And taxes are due first half in February, second half in June, or you can pay the whole thing in April. You have a choice. So again, based on if you have an escrow account, and if your account gets screwed up and you don't win your appeal, or you don't win all of your appeal, you might have to do some finagling there to make that escrow account happen. And again, the deadlines to appeal, you know, we talked about this before, but it's the 1st through the 8th, depending on the county you're in. And then the last day for the assessor to mail either denying would be August 15th, and then you could go back and reappeal. So that's really, I mean, it's pretty simple. In terms of appealing, it just comes down to having somebody help you get really good comparable sales that are the most like yours during that period of time. You will see a lot of the assessors have used the highest, not necessarily the most like yours. That's your number one argument, or if you purchase during that time, it would be the second argument. And if at the end of the day you don't win, just make sure you're putting money aside to make up that difference for your escrow account. Lastly, so Tim is my husband, he's actually back there, and I only do forward mortgages, I'm a lender. Dave and I work together a lot, and Krista. But in terms of like the elderly and the tax changes, I think this is really going to affect people that are elderly and are on fixed income. And so if you know somebody like that and they have equity in their home, all Tim does is reverse mortgages, and they have a bad rap, but they're really an amazing tool, especially for somebody who it could change their life. So if you guys know somebody who is elderly and this new tax burden, you know, they were barely making it, and now this is really going to put them over, it's really something to think about. You know, reach out to us because it's a life-changing tool, and especially in a case like this, some of these taxes goes up $3,000 a year, and that's a big deal. So that's what I have. If you guys have any other questions, my info's back there, and thanks for coming. Or are there any